The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It's Friday, 8:30 a.m., 60 minutes to go until that opening bell. And we got markets yet again, higher prices. We get the S&Ps up 16 points right now at 34.53. We're within almost 5 points of the highs we had overnight, 34.60 in the S&Ps. NASDAQ up about 50 points at 11,588. You got the Dow up 125, 28,435. And the Russell up almost a full percent as well at 1641. Jumping around to commodities, gold catching a nice bid, up $27 at $19.22. We're coming up to the highs of the week we had on Tuesday of $19.27. Silver up 66 cents at $24.54. You were under $23 on Tuesday. We're up about $1.50 from those lows this week. And notes and bonds, continuing the trend, hanging the 10-year, stuck at a 138 handle right now. We're looking at a 10-year yield that's sitting at 0.775%. The 10-year negative 2 ticks at 138.27. The 30-year negative 8 ticks at 173.30. We'll jump over to the VIX as we start off the show. 25.83, finally getting a nice little pullback on the VIX. We were up as high as 30 on Tuesday when we got the tweet saying that the stimulus talks were over, and just like that, 25.83. Pretty remarkable when you think about before that tweet, okay? Before the tweet from the president saying no more stimulus talks, the VIX was comfortable at maybe 28. With everything that's happened, we're sitting at 25.83. For even a little bit more context, going back about 20 days, you see where we were, folks, Thursday, okay? And I don't know if that's going to be a bad tick on that VIX at 2407. My guess is it's going to jump right back up here in a moment. Thursday, before the president came out and told the world that he had COVID, okay, the VIX was trading at about 2650. If you believe there's less volatility priced into this market, all right, then what is that about? Is that about that the elections do have less volatility? Is the picture clearer? I mean, some of the polls pretty harsh to the president right now in terms of having Biden up pretty substantially. Some of the swing states pretty substantially. The Senate completely in play now. Maybe the Democrats sweep everything. Maybe that kind of clarity is what's providing the VIX to drop. Nonetheless, pretty remarkable. And as I just mentioned, I don't know if that's going to stay down there at 2406. There we go. We're back up to 25.37. I don't know how that just ticked down there, but that is the real number in the VIX. But still, we're sitting so much lower than where we were before. So you back it up to last Thursday, 8 days ago, okay? We did not know the president had COVID, and the market was trading higher on news of a stimulus. Since that time, we all know quite the news cycle we've had for the last 7 or 8 days. And we now have the VIX at the lowest level we've seen dating back to last Wednesday when we hit a low on Wednesday of 25.06, and we're right up to that level of the VIX. One of the most interesting things going on right now in the market, how that's navigating and where we're at. All right, jumping around to what else we got going on in the market. And we'll start it off with the headlines of stimulus. So, I mean, this is basically the headline of every day this week. Speaker of the House Pelosi, Treasury Secretary Mnuchin spoke about the prospect of striking a broad stimulus deal after President Trump pulled out of the talks earlier this week and called for a standalone bill. Pelosi said she would not pass a separate bill to send relief to airlines to cover payroll. I mean, you had the Federal Reserve Chairman out this week saying specifically, the worry is not doing too much. The worry is doing too little. That same day, the president pulls out of the talks, and then he says, maybe we just do it little by little, piece by piece. In any other world, folks, if you had the Federal Reserve Chairman chosen by this president coming out and saying there is a very substantial worry about doing very much too little, businesses collapse, jobs aren't there. Once we're past the virus, you just can't turn on that spigot. The worry is not doing too much. The worry is doing too little for the hardships that this economy will face if we do too little. And on that very same day, the president says no more talks. And then later that night, he says, how about we just do it little by little? So You make your own decisions on that. But this economy, folks, it's a tough one. Hopefully they get something done in this bill. Nonetheless, it seems like they continue to talk, but the market, no matter what, just continues to trade to higher price. This is an hourly, going back about 20 days, looking at a low of 31.98. You put the S&P on a daily, right? I mean, it's barely a blip in terms of what we trade back. Now, Fibonacci-wise, you put that up there, just under a 23% retracement, nothing too substantial. I mean, if we had made it back to a 382 retracement, which for you Fibonacci lovers out there, pretty standard, reasonable retracement of 382, that would have brought us back to about 3,053 maybe, give or take. The market got back to about 3,200. So pretty slight pullback. And just like that, folks, we are within about 130 points of the all-time highs in the S&P. We're above the pre-COVID levels. Excuse me, you jump over to the Dow. Now, it's interesting here, jump over to the Dow. Look at this run we've had since June, okay? You got a 61% retracement of the run we had since June. Just like that, we've almost gotten it all back. And really, I'm going to wipe this off here for a second. The Dow had not made it back to those all-time highs yet. We're within about 1,000 points now of the Dow, making it up to 29,500, give or take. Currently sitting at about 28,424. All right, what else we got going on in terms of stories? The mortgage market. So some good news here. Coronavirus mortgage bailouts fall below 3 million in pandemic's sharpest decline. The number of mortgages in active pandemic-related bailouts plunged as the first wave of forbearance plans hit the end of their 6-month term. So over the past week, active forbearances dropped by 649,000 or 18%. That brings the total number of plans below 3 million for the first time since April. As of October 6th, 2.97 million homeowners remain in a pandemic-related forbearance plan, or 5.6% of all active mortgages, down from 6.8% the previous week. That's quite a drop. If we continue to get those types of numbers, maybe we get back to some semblance of normalcy, at least after this coronavirus pandemic ends. Excuse me. The plans allow borrowers to delay their monthly payments for at least 30 days and up to 1 year, administered in a 3-month blocks with the option to renew at the end of each period. So the payments can be made up when the loan is refinanced or the home is sold. Lenders are also doing some loan modifications, lowering interest rates, as well as allowing some borrowers to add payments to the end of their loan. That's crucial stuff, folks, because, you know, if you're missing payments, you're not going to be able to make those payments up next month. And the banks, not that they're in this too, but they are. They're investors too, right? They're partners. They've made these loans on these properties. You have a pandemic hit. They just don't want to foreclose on all these properties, kick people out of their houses. That's not the recipe for success. As the first wave of forbearances from April hit the end of their initial 6-month terms, we've seen the strongest decline in the number of active plans since the pandemic began. One economist saying, though the market continues to adjust, there are clear signs of long-term improvement. An additional 800,000 forbearance plans are slated to reach the end of their initial 6-month term in the next 30 days. The improvement in mortgage bailout numbers was across all investors class, but portfolio held and private labeled security loans saw the greatest reduction, falling 24%. Pretty interesting number. So every single month, we're going to get something like this, as it's basically a 3-month rolling cycle. Are you going to extend it again? You can do it up to a year. And we'll see where those numbers in 30 days from right now, 800,000 come due. Are they going to be able to extend that another 3 months, or are they going to get off that forbearance plan? Stay tuned, folks. We come back after the break, see what else we have on tap for Friday trading. I'll be right back in 3 minutes. Stay tuned.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&P is positive by 17 right now. NASDAQ positive by about 58. The Dow positive by 123. We're going to jump over to the chip sector a bit. You got AMD shares trading lower, down at 83.78. Been as low as 82 in the aftermarket. The news overnight, AMD said to be in advanced talks to buy Xilinx in over a $30 billion deal, billion with a B. AMD advanced talks to buy rival chipmaker Xilinx in a deal that could be valued at more than $30 billion, a deal which would mark the latest big tie-up in a rapidly consolidating semiconductor industry, can come together as soon as next week. That's the Journal reporting that. AMD has seen a higher usage of its products recently, driven in part by an overall surge in chip demand due to global shift to work from home and market share gains from rival Intel. Yeah, if you're following the acceleration they had, folks, I mean, check out this pop that we just went on their last earnings from 55 up to almost 95. You're trading right now, backing off a bit at about 83. We'll jump over to Intel. In comparison, there is their fall off where they basically say that they're going to struggle to compete with the next chip that they need with AMD. You have Intel drop from 62 overnight. You're down there basically at 47. We're currently trading at about 53.37. XLNX, Xilinx, I believe. There you go. And you're seeing a pop on them. Now, here's their chart. We're going to open at 123, folks. There's 123 on the chart, okay? Let's put this on all the way back. 141 is the high, all-time high we're talking about from April of last year. Again, you put this now in the short term, and there's your pop on that news, up to about 123.55 right now after reaching a high of 126.80 for Xilinx in that chip sector as they continue to solidify. Jumping over to the airlines, and not too surprising, but you got Qatar Airways CEO warns more collapses coming for the industry. 43, this is remarkable. So we're all, as Americans, very used to, obviously, American carriers. So it's American, United, Delta, JetBlue, Southwest. Those are the ones that come to mind for me. I think those are the big five, especially in the U.S. 43 commercial airlines have already folded this year, and some 485 planes have been idled due to the blow to travel from the coronavirus pandemic. 43, a lot of them internationally, probably that we don't know about. Can you even name I mean, how many airlines can you name more than the ones I just named, right? Not many, but overseas, internationally, many airlines. And this is the CEO of Qatar talking about the International Air Transport Association expects the industry to burn $77 billion in cash. $77 billion just in 6 months for the final part of 2020. And folks, it's already October. Even if we get this vaccine out in the next 3 to 6 months, which is what most scientists and professionals in that industry say is a reasonable expectation, 3 to 6 months from now, you're still looking at a time period of a long time to get especially international travel back to anything that we saw before the pandemic. And that is a huge cash burn in a big way that we're talking about. All right, what else we got going on? Jumping around to other stocks making moves this morning. We'll start it off. So NXP, staying with the semiconductors, NXP raised its outlook for the ending quarter, saying it had seen material improvement in demand across all its markets, with particular strength in automotive and mobile segments. NXP. That's not them. What are they? NXP. Semiconductor, NXPI, there we go. And there you see the pop on their raised outlook from 135 to 142.55. Semiconductors, those chips, whether you talk about, I guess they're talking about automotive, which is interesting, but definitely the mobile segment, right? So Apple's going to extend some free one-year trial subscriptions to its Apple TV Plus service through February. It had issued those free trials with the purchase of Apple products when it launched the service a year ago, so they're extending them. I don't know if that's actually good news or bad news, folks. My guess is that they are struggling to get people to sign up. They don't want to lose the numbers. They're trying to keep those people. Maybe they're going to keep them on the free plan for now, hoping to suck them in, keep them going. Apple shares at about 115.48, putting this on a daily for where we are. I was just writing an update, that I'll be putting out for my subscribers later this morning, talking about some of the equities that I'm looking at on the long-term portfolio of equities that we'll be taking a look at. Always got to consider owning some Apple. Here's the one thing I will say. If you own any type of index fund, folks, you have a lot of exposure to Apple already, not to mention all the other FANG stocks, of course, that make up so many of those indices today. But nonetheless, Apple, I mean, talk about a 382 retracement, almost right to the dollar. That low is 105.58. You're trading right now just above 115. You make it as high as 138 on Apple. Anywhere where you get back near that 382 retracement, that might be a nice buy point, especially for a partial position if you're looking to get in on some Apple. You know, you can't go wrong owning Apple, folks, in a long-term portfolio. The company is dominant in their sector. They got hundreds of billions of dollars in cash. One of the things I talk about in the update I'm going to be putting out later for my subscribers is when you're looking for long-term equities for a reliable, safe retirement portfolio, one of the things you want to focus on more so than almost anything else is capital preservation. Now, you can have small pockets of your long-term portfolio with higher risk. You can have small pockets with maybe a few technology stocks, okay? But when you're talking about the core of your portfolio, what I would recommend is you want to be certain, and there's nothing certain, okay? You want to try to be as certain as you can be that these companies you're investing in are going to be staples of our life and our economy in the next 10 years. Maybe even the next 20 years, right? Depending how old you are. If you can guarantee that these companies, and you can't guarantee, all right? I keep saying it, but you want to be as sure as you can be, all right? And that the company you're investing in is so ingrained in our society that they don't have the ability to get washed to the wayside, because that's where investments really get problematic. You know, you are able to lock in upside exposure while being able to keep your principal intact. One of the most first rule of long-term retirement investing is capital preservation when you're investing in companies like Apple, and you're going to get some pullbacks, all right? I mean, you just went from 138 to 106. You shaved $32 off the price of Apple in the span of, you're talking about September 2nd to September 21st. 19 days. You lost, $32, which is 25% of the equity in the span of 19 days. But in the long term, folks, that's grabbing the high, that's selling the low. You'll be all right. Apple, strong company, and I found it interesting, that 382 retracement. All right, what else we got going on? So Disney, they are pushing forward again one of their movies. They're just piling up, folks. It's a tough deal for the movie business. They're going to release Soul have not heard of this flick just yet, directly to Disney Plus TV service on Christmas Day, deciding to forego both movie theaters and previously planned November 20th release date. They got so many movies coming down the pipeline that they just can't push it back. Disney, very fortunate that they had their streaming service already going with all this going on. They'll be able to push that to the streaming service, and they'll look forward to movie theaters opening in a big way as Disney continues to struggle with movie theaters and their parks business in a big way. Gilead released final data from a study of its remdesivir antiviral treatment, showed that the drug cut recovery time by 5 days compared to patients who received a placebo. GILD is their symbol, and we're going to zoom it in, trading a bit higher this morning. There you see the pop up to about 64.79 from a close yesterday of 63.32. And this S&P, it's just inching. It's inching higher, folks. That high overnight of 34.60, we're within a few points right now at 34.5725. Stay tuned, folks. We'll be right back to finish up the show, see what else we got going on for Friday. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Markets climbing. S&P is positive by 21 now. Jumping over to GE. GE trading high overnight. Goldman, the story there. Goldman resuming coverage of GE with a buy rating. Goldman resuming coverage of GE with a buy rating and a 12-month price target of $10 per share. You see the pop higher up there to 705 right now this morning. GE, other companies trading higher. How about HCA? So HCA, the story for them, they're going to be returning $6 billion in government aid it had received as part of the coronavirus relief fund. The hospital operator said the initial emergency had passed and that available cash from operations would be sufficient to repay the money. HCA said it expects to repay the relief fund from available cash and future cash flows from operations. The hospital operator had $4.6 billion in cash and cash equivalents as of the second quarter. Jumping around to articles, they are a huge company. They are making plenty of cash. It was unfortunate that so many billions and billions of dollars went into some of these companies that have huge venture backing as well. But nonetheless, they'll be returning that. So AT&T, they're planning thousands of job cuts in its Warner Media unit, seeks to cut costs by 20%, according to the Journal. Did not confirm those numbers, but the operator of HBO, TBS, and other TV channels did issue a statement saying it was implementing a restructuring in response to the impact. Jumping over to AT&T shares this morning, up a bit with the market, up almost 9 pennies, basically at 28.70. Zoom. So Zoom, you have Mizuho, began coverage of Zoom with a buy rating, saying it had a best-of-breed video conferencing tools and that it believes Zoom can continue to deliver outsized revenue growth. They believe that Zoom's October 14th Analyst Day will serve as a catalyst for the stock. Zoom, this one, talk about zooming, folks. Man, oh man, we'll jump back on a daily for Zoom. That was their last earnings. They crush it out of the park. In one day, you trade from 325 up to 478, and guess what? We're sitting right at 478 right now. Actually, we're sitting at 488, ready for that open on Zoom. If you haven't checked it out, folks, check it out. Zoom, they got a great product. I'm biased. I got some Zoom, but I got some Zoom because they do. They got a great product. Stay tuned, folks. We got our man Larry Pezzimento coming up for the open on Friday. Coming up next. We'll be right back.